Hello, folks. Welcome to State of the Market. I'm David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone as usual. Today's Monday, the 27th of January. Showing a few disclosures first. I'm going to share a few things in the chat. Remember that we use ETFs to kind of look at sectors and sharing the disclosures for those if you're interested. I'll show the standardized returns as well. So today is one of those days that, they don't happen very often. It's one of those days when when it could be a paradigm shift or it could be nothing. Maybe not nothing, but it might be overstated in its importance in terms of the sell-off in semiconductor stocks, and that's an important thing to bear in mind. Although before we had this sell-off today, we did have some interesting bullish signals overall in the overall market that we're going to talk about. Why is this not closing? 1 second. Let's turn that on. All right, good. For some reason, my PowerPoint wouldn't go away. PowerPoint's acting strange today. Okay, so I want to actually start off well, let me show you these standardized returns. And so these are the standardized returns on the ETFs. I'll mention a few things that are kind of interesting. We had a very significant sort of shift in sentiment. We went from the most bearish since November of 2023. The 10-year Treasury hit the highest since November of 2023. The dollar index was in the same sort of area. And then we had this shift toward bullish sentiment, the biggest shift also since the bull market started, or the current rally began in November of 2023. November 2023 was when we realized the Fed was going to cut rates at some point, and the market started rallying, sentiment improved, yields started falling. All that happened in November of 2023, and in many ways, we have gone back to things from that moment in time. So I think it's important to kind of realize that some significant and kind of, I don't want to say historic, but things that are not run of the mill have happened in the last 2 to 3 weeks in terms of internals, in terms of sentiment, in terms of intermarket patterns. So there's a lot going on beyond just this Chinese chatbot that is scaring everybody. I want to also start with this chart actually very quickly on my TradeStation platform. And what I wanted to point out, this is the S&P 500, and we've talked about some of these patterns actually on our market trends webinar, which we do on Thursdays, and we will be doing that again this Thursday, January 30th. But this is one of the charts we use in that webinar. And so there was this falling trend line that we're above. There was also a level we had highlighted. It was a low of December 27th that then it was like a support, became resistance. And now what's interesting is I had said back here on this day, on the 16th, that was actually one of our webinars. We said if it holds that level, people might look for continuation. It's exactly what happened. So we're holding above that level. It was kind of important. And if you look, this was the Friday, and then we had this, false breakdown, bullish reversal, at the election day level on the S&P, but this was the Friday. So when you do Fibonacci retracements, traditionally you would start from Friday to the high or Friday to the low. If you're looking at a move, you would start from the Friday at before the move begins. And what's interesting here is that the S&P is essentially holding a 50% retracement of that move from that Friday. I wonder what happened if we actually moved it down to the very low. And in that case, we're above a 50% retracement, but that's where it should be. Anyway, overall, so the thing is we have a very significant thrust here to an all-time high. We pull back, we hold the 50-day moving average, we hold the 21-day exponential moving average, we hold the 50% retracement. We also hold above a level that was pretty important in terms of, probably the most important recent level was 59.33, and we're holding above it. We also made our low early in the day, and haven't done much since then. So those are also kind of, kind of interesting here. Something else happened last week that I thought was remarkable. The S&P 500 closed at an all-time high, or hit an all-time high, and not a single sector did. Not a single sector fund did. That's fascinating. I mean, it might have happened before in history, but I think it actually does just kind of show the kind of breadth that we have overall. If we look here in the level of our key ETFs, what we're really seeing is we're seeing today kind of everything but your classic American tech. So home builders are strong. The banks are kind of strong. Consumer staples and healthcare are kind of strong. So it is a rotation here toward things like value. The IWD is barely down, and the growth IWF is getting crushed. chips are down 11%, but financials are up. So this is kind of like what you would expect when you look at this kind of news environment. I do want to point out though, if we look, we have this kind of idea. Where'd it go? Hmm. One second, I lost my charts. I'm going to bring them back up. Sorry about that. But there is the idea we have of our volatility cycle, and this is our volatility cycle. And right now we're in a spot where we have our correlated sell-off. I don't want to say it was complacency, but this is a very significant kind of sell-off at this time. And I think it's just important that you know if there is a good rebound in the market here, it could very well come from tech and chips rebounding. It might be a focus on the continuation of what we're seeing in things like financials, but it might also be just a big rebound in the overall, just broad S&P. So I want to just point that out. Just because some sectors might not right now might be showing something bullish, like financials or healthcare, it doesn't mean if the market stabilizes for a day or two and then it starts rallying again, it doesn't mean those sectors are going to do well. So I think right now we have to realize that if people are looking for the market just to kind of continue higher from here, it might be a little bit tempting to go after things like healthcare or things like financials. But the thing is when you look at the way things normally work, and we reload this is my weekly chart here, we have to just realize is that when you look at the carnage that's happening now in some of the tech and stuff, there is a chance for them to have a sharp rebound, and then maybe after the sharp rebound, that's when you look for longer term continuation in the non-tech stuff. I want to just kind of point that out because there is that temptation, I think, to just be like, oh, financials are going to do great. And then we get 2 to 3 days of the S&P rebounding sharply, if that does happen. But if we do get that sharp rebound in the S&P, it could very well be led by some of these hard hit tech stocks that don't go back to where they were, but they do give a bounce from here. So I want to just point out that focusing on the broad S&P 500, if you're expecting a significant any kind of rebound, might be the way it goes more. And that is what we have with this concept of the volatility cycle, which is to look for correlated index-based rebounds instead of trying to be picking sectors and stuff in the midst of a rebound from a sell-off. That's just one of the kind of things that we often focus on with our volatility cycle. I'm going to start off first of all though with the semiconductors, because this is the stocks, and here we have now this uptrend that kind of broke. And I think at this point, there's a lot of lines you can draw on this thing, but the most important line is the fact that we have lower highs and no new highs. And I think right here we have something that you can look at it from this, which is not really, I think, it's hard to say a lot that's bullish now about this. And I think that this situation with DeepSeek, however it actually pans out, it raises questions about the dominance of the companies like NVIDIA and Broadcom, and some of the other ones that were involved in this, like Taiwan Semi and just these overall universe. ASML is taking a big hit today. So I think it takes an overall. The question now is that it just creates a kind of uncertainty and lack of enthusiasm toward these things that trade at high multiples, and I think that's just something to realize is that these guys already are pricing in a lot of good news, and a lot of people are long these names, and they're crowded longs, and that creates the potential for these sort of like big unwinds like we have today. So I think that's important to realize. So right now, the semiconductors, to me, breaking this line actually starts to give some signs that this is something of potentially more of a longer term sort of topping thing that is taking shape. Okay, so I'm going to now look at the S&P 500. And as we look at this, to me, what does kind of stand out, I'll just give you a quick preview. What stands out to me today overall are the financials, the communications, the Dow Jones Industrial Average, healthcare, and maybe consumer discretionaries, and obviously technology not looking great. But our old friend energy might be coming back if we're looking for something that's not going higher. If we're looking to be more on the, looking for the longer term trends that we've talked about a lot, energy seems to be going back into that camp of not going up. And having hit resistance and having a range with space to the downside that it's filling. Now, S&P 500 here. So now we have essentially in the weekly chart, we have this big range. We don't have this, we do have this trend line here that, we're kind of breaking above and trying to hold that trend line. So from my perspective here, this is something where holding that trend line is an interesting sort of pattern. And now we just sort of have this range. And I think the fact that we hit that all-time high, don't forget, last week, the S&P 500 had a record weekly closing high. very often record weekly closing highs, they see follow through, and they are, they have more record weekly closing highs after these things happen. Remember, earnings season is getting started. We're expected to have accelerated earnings growth, and it's been good so far. So this, I think, is a thing where we have to realize that we're kind of holding this level across here, holding above the top of that trend line, and we're in the middle of this range essentially. So from my view, this is something where we still have essentially, we're basically where we were right at the high from November, early November, after the right around the time of the election, that immediate election week rally. So wanted to kind of point this out at this point. It's holding this falling trend line and it's in this space. And this, I think, is kind of the watch. If we kind of hold today's level, I think people might actually be thinking it was trying to put in a higher low. And the fact is that we are pretty much, if you look where we were, we're holding very much from the opening, first few minutes of trading. We've held significantly above that ever since. So these are a little bit reminiscent of some of the candles like we had back here in August, when we basically gapped down and we basically held. We didn't make new lows throughout the day. So I wanted to point that out. Now, when you also look on the daily of the S&P 500, I think it's important to realize that the short-term momentum here is actually pretty bullish. The 10-day moving average is rising. If you look on other things, we see the 8-day exponential, is above the 21-day. MACD, I don't have it on this chart, but it's rising. So the short-term momentum now is actually something that you could say is bullish. So I think that's also important to realize. So you have that rally, momentum turns bullish, the short-term moving averages start rising, and you have that first pullback. And sometimes people looking at opportunities find that this is actually an area where it makes sense to be essentially looking for the continuation of the short-term momentum. Now the Qs are in a more troubled sort of spot. And so I think when we look at the Qs here, on the weekly chart, we have this. Sorry, here are the Qs on the weekly. And so to me here, now this is a big problem. This was looking like a potential false breakout on the Qs with this falling trend line. And now the risk is that we break, this becomes the new trend in the Qs. And I think that is something here that we have to be aware of. And so from my view here, we want to see how we behave at this trend line. And then the low from last week as well is actually, I should add that now as a potential level to look for. I think last week's low, and in fact, right around, if you look at the high, right around kind of, this the close of the previous week, kind of near the low of last week, somewhere around 521 on the Qs here, is something people might look at as a new kind of important sort of resistance area. Now the Dow, on the other hand, is fascinating. It's green. Isn't that interesting? The Dow is green today. And so I think right here, we have the tightness, which is interesting. I'm actually curious if we do a little Fibonacci retracement here, because sorry, if we actually do Fibonacci retracement, if we look at this whole candle from last week, we're actually on this point, you can actually see we held 50% of last week's move, which is actually pretty interesting. If you take it from Friday to Friday, we can see that basically today essentially held 50% of last week's move, and now it goes to new highs. This suggests that we are seeing the rotation to the Dow, to value, to financials, away from the NASDAQ. So this, I think, is something that people might start to notice on the DJI. Now the Russell is just kind of, this thing has a total identity crisis. So anyway, I just think it's important that this has this falling trend line. It's stuck at this summer high. This is something that I don't know if it's a biotech side of it, if it's the regional banks or whatever's the problem with this, but this continues to show just problematic patterns that suggest that a breakout is not really so much in the cards for this. Whatever's wrong with IWM or Russell, I think the bigger issue is that people looking to get away from the large caps are doing it with large cap value. They're doing it with IWD. They're doing it with financials. They're doing it with maybe healthcare. They're looking for stocks that are making new highs today, like Bristol Myers. Who would have guessed Bristol Myers making new highs? A bunch of random healthcare stocks today making new highs, like Cardinal Health, Stryker, Becton Dickinson. These companies are making new highs today. So there's a lot of these kind of other companies that no one ever thinks of, but they are blue chip stocks like Deere, MasterCard, Visa, Abbott, all making new highs today. And I think the thing is, just because people want to get away from the Qs doesn't mean they have to buy the small caps. They can buy the value names. And healthcare is full of stocks like that. Financials are full of stocks like that. And one I got to just quickly mention. I mean, look at Berkshire, BRKB. I mean, in a market like this, people start to think property and casualty can be kind of interesting. I mean, a lot of the bad news is kind of now kind of swept through these fires and stuff. And now, whatever happens, people might kind of think it's interesting. But the other thing about Berkshire is there's all these articles that Berkshire has more cash on hand than ever before and blah, blah, blah. So it might actually put us in a spot now that the market regime is kind of changing, that maybe Buffett starts putting money to work and maybe it goes to healthcare. Maybe it goes to financials and maybe it doesn't go to Apple anymore and all these names. So the thing is, what happens if Berkshire comes out on the other side of this position for a new kind of market? So I think that's actually something to bear in mind here. But the property and casualties, the kind of boring as sin, kind of financial stocks. One of them was interesting to me also is Travelers, for example. Travelers here having a strong day, member of the Dow, had an earnings, see it rallied on earnings, pulled back, kind of holding this. I think people are looking toward these names now. So when that's happening, why mess around with the Russell? And I think that's really the key thing here, and the reason why the Russell is unable to break out. So I think this is right now the key thing I'm kind of seeing on this remains a challenge sort of pattern. So the 10-year treasury here, remains below this level is very important. On the daily chart, I'm not going to get into it here, but there was a very important gap here that we touched and we broke to the downside. And for me, I think that the 10-year here is increasingly kind of the narrative is that we might have seen a high on the 10-year, and I think that's important. So from my view here, the 10-year is not something we really have any real opportunity to necessarily do anything with in terms of trading. We had a Fed meeting this week on Wednesday at 2. And my sense is when you look at the recent commentary from the Fed, they've been trying to kind of hit a middle of the road. They were super dovish. Then in December they got more hawkish. Then through the beginning of January, they kept having the hawkish message. You had especially Michelle Bowman come out and say we might not cut rates again. But then Christopher Waller comes out the next week and he basically goes right back the other way. I think the Fed now is trying to say, you know what? We said 2 rate cuts and we meant it in the last dot plot. Doesn't mean that's what's going to happen, but we don't want to basically deviate from that for now. And I think we're at a spot now where we've basically hit a certain degree of sort of understanding now that the Fed is essentially done with their work for now. If they're going to cut more, they're going to come back later. It's not going to be this week. And the thing is now in some ways we can move away from the Fed. And after essentially 3 years of all kinds of ups and downs in interest rates and borrowing costs, we're now kind of at a spot where things might actually just kind of stop being so interesting and so dramatic. And I think that's what we're seeing here of the 10-year essentially peaking out under 5%. The fact this thing stalled right around 4.75, the previous high was around 5. I think that's important. So this, I think, is telling us here that we've actually achieved a degree of balance on interest rates. And that's something that is overall something of a positive. So the materials here are interesting. They went up to this resistance level, and I think now they that I'm not really sure. I mean, this is something when you look at if we see yields come down and there is a sense of the Fed being dovish, this might be something where people look for a breakout through this level and a push back up the range. This macro environment with a potential shift away from mega cap growth and the tech and the chips and stuff, something like materials might actually be a place where people look, especially if they think that rates have peaked. So right here, I think this level is important, but it's also something that has been essentially in a range, and it did hit a new all-time high, back in October. So at this point in time, this might actually be an area where people have some interest. Now, communications, we have said, has in many ways, the tightest, cleanest weekly uptrend, and it continues to do that. It opened down today and immediately went to new high, and it's actually on pace right now for not quite, but on the overall, history of things, it's getting pretty close to a new record weekly closing high. So I think overall, this is something where this trend remains very much in effect. Interesting how look at how this broke that trend and stayed above it, and then the Qs did not. Well, the Qs, don't forget, are mostly XLK, and now when you look at the XLC, it's above. So this is, I think, telling us the communications, which is Meta, which is Google, and Netflix, which had very interesting earnings. Those things overall, this is an area I think where people, DeepSeek is not going to come and as much be a threat to these sort of things, the Chinese, all that sort of stuff. this is not as much of a risk to this part of the market. So I want to just kind of point that out, that this has broken the trend line and stayed above it, unlike the Qs. Energy. So basically, there's an OPEC plus ministerial meeting on February 3rd. The Saudis looking to raise prices to Asia, but now that's kind of priced in. If you look at all the oil news services, everyone's saying the Saudis are going to raise prices, blah blah blah. But at the same time, now they're looking to proceed with those expected April production hikes. Remember, they were going to raise production hikes, and then they didn't because China started weakening. And I think right now, to me, energy is a spot where it might just be like, they keep saying we're going to hike production, and we never do because the Chinese production or the Chinese demand just never comes through. So I think right now we have to realize that energy is in a spot where it's in a range. It's made a potentially significantly lower high on the weekly chart here at 94 on the XLE. And from my view, this is something where people might be looking to turn around 88. That is some potential. But I look at the Chinese data today, and it continues. Whatever comes out from their AI, that's interesting. But industrial production and PMI today, industrial profits and PMI today, both weak. I think China's in a spot here where they have a significant disease, and it is called bad balance sheets, bad loans, debt crisis, whatever you want to call it, and it doesn't go away quickly. It is a drag on overall economic activity. So I think this is something that remains an issue here for energy. Everyone knows it. And so right here, I want to just kind of point this out. XLE is something that we've repeatedly talked about, this weekly pattern, this range really for the last year. And, from my view here, we have a lower weekly high. And honestly, 83. But the fact is, what if this is the lower weekly high? Because if we have a lower weekly low after the lower weekly high, we're talking closer to 80 here. So I think right now we have to just realize that, energy has been in a pretty clear kind of trend, in a range in a way, but it's a range that has been within the context of kind of a bigger sort of, you know, peaking and struggling at a time when the market's hitting new highs. So I'm still thinking, I just want to point that out, that this level here around 94 to me is a lower weekly high, and the news that's coming forward might not be terrifically bullish. And a lot of the things that drove energy up, remember, were one-off things that Biden did toward Russia at the end of his very end of his administration. He did these things. So at this point, all of the geopolitical news that pushed oil higher might be in the rearview mirror. Unless you expect some kind of major escalation in the Middle East, at this point, it might be hard for more geopolitical news to lift oil. All right. Financials here are basically very interesting. They look very similar to the Dow. And I think at this point, they've remained above this. They had this huge bullish outside candle, and they're basically here pushing up. So I think right here, this is, this high is very much in play. But from my perspective here, this is similar to financials. Financials, consumer, and communications continue to have these weekly patterns here that suggest that these are areas where money is shifting as semiconductors, continue to struggle. Industrials to me here are in a spot where people have to be a little bit more careful, though, because this is something where it is trying to hold the low, and there are some things happening. I think when you look at some sort of things in the industrial space. I mean, one thing I keep wondering about is Boeing. Boeing reports earnings soon, and there's an aspect of Boeing that you might want to just look at it and think about it. But the thing about Boeing is that it might finally be setting up for a true turnaround. And some of the information in Boeing recently has been a little more positive. So I want to just point that out, because to me, when we talk about industrials now, I think about multiple different stories. But one story to me in industrials, whenever I look at the industrials now, is I just think about Boeing, and I ask, is it finally there? Is all this bad news finally done after years of trouble in Boeing? And if you look at some of the news recently, it suggests it might have finally kind of turned that corner. So I wanted to point that out when we talk about industrials. Nonetheless, here there is a lot of exposure to different kinds of data center construction and all sorts of things here that has been a lift for industrials, and they have an AI connection here. So from my view, this is something that is potentially very kind of tricky, the way it has it didn't reach this level, and we have to be careful of something like this happening in something like industrials. We have to be careful of this happening. And I think so. I wanted to kind of point that out as a potential risk in industrials. Now, um, here we see it's interesting. Let's look at this line here in tech XLK. I mean, you can draw a line like this if you want. I mean, the line that was interesting to me was I'm not going to draw that line. It was in the Qs, but not as visible in here. I mean, you can actually, if you actually, it is interesting. I never noticed this one, but look at how we have basically these lower, aside from last week, basically we have this fault, this failed breakout, this trend line, and it's like multiple closes under the trend line, a single one that didn't work, and now we're back there. So it is similar to what we see in the Qs. But I think right now this is now showing some real risk of being, you know, something that just turns into kind of a top, and maybe, if people do like it, they look for, test back to the lows, but maybe that means we get more like here. Maybe that is more of like what we see with something like the XLK here. So for me, this is now very kind of difficult and sloppy, but the point is it's heavily owned. There's a lot of concentration in it, and it's not breaking out. And this is something that has the potential of being some kind of distributive top that has a lot of kind of persistent selling to potentially develop in it. So I think we have to realize that this is heavily owned. There's a lot of assumptions baked into tech valuations that might have basically gone out the window in the last 48, 72 hours. And so to me, this remains a problem to see this big sort of failed, this whole pattern up here, this whole kind of, this to me is something that looks like people might look back and see as a kind of resistance. We might look back in 6 months and say, wow, that was kind of the time when tech, when people rotated away from tech. Um, Consumer staples. Also, this kind of bounce today. I mean, from my view here, this is something that it is interesting in one respect because you get this whole thing of people shifting away from the broader tech. And the other thing is, and one of the reasons why my view is not overly negative on the S&P is the fact that historically the market does not drop until consumer staples outperform. And if you actually go back and look, you will see historically that the market, if consumer staples are showing negative relative strength versus the S&P 500, the market normally, I mean, that normally doesn't mark a top. So I want to just kind of point that out because consumer staples have been absolutely lagging for a long time. And so I want to just kind of point that out. There's a theory that I can go into another time, but it's a very interesting indicator that I've seen I've noticed it many years ago, and I've seen other people. I'm trying to remember some of the other guys. I think the people at Bespoke talk about it sometime. But it is interesting. By the way, Bespoke said today that Bespoke investment researcher, those guys, they do great work. It's interesting. Today they said something like the market cap drop of NVIDIA was the biggest market cap drop of any company ever, or something like that, over $600 billion in a day. Just interesting factoid. But other people have noticed about the consumer staples is that they tend to outperform at the end of a bull run. They have not been outperforming. So what does that mean? It actually means here that in many ways, these guys might be set up for something of a move higher. They have earnings coming and things like this as well. So, from my view here, this is something where people might just look for this to return back to the high if the market is bouncing. But again, overall, if the market is bouncing, the sustained move might very well just come from the S&P 500. So the real estate investment trusts here are also kind of trying to put in this low. And from my view here, this is something that is kind of interesting to think about in terms of interest rates. And I think that, you know, when I look at this, this is not something I think a lot of people trade and stuff, but it is showing signs of essentially holding here. It's interesting to look at this quick rebound and the way it's essentially holding, it's turning these old resistance levels into new support. So from my view here, this is something where there's a lot of different places you can look for resistance up to 43, up around near 46. So there's a lot of areas here where it hasn't broken out and it could be kind of agonizing for the time being. But this is something where people could be looking for a longer term. And we have a series of higher lows here going back really to the end of 2023 that matches the interest rate outlook. So I think there's an area to kind of be aware of and think about, but also to recognize that it could be, kind of treacherous. Utilities here are also kind of treacherous and unclear. From my view, we might actually see something back closer to this level around 72.5. There's a lot of uncertainty now about the American data centers thing. So I think in this case, this is also something where it's just super, unclear because there's a lot of fundamental things. Who knows what's going to happen with the California wildfires? That could turn into some kind of liability for some of those companies. We also have these huge assumptions about AI power that now could also be at risk. So this is one for me that I think has a lot of trickiness, and people might actually be looking for a test of the recent low or even a test back down here to this high of May. Now, healthcare is interesting because it's at this weekly high here. And yeah, from my perspective, this is actually something that's very interesting with the relative strength in healthcare. Most of the, maybe not most, but a lot of the new highs today are healthcare stocks. So this is also, I think, something that is interesting. I also saw some people, I don't remember who it was. It was one of these guys at over the weekend. It might have been Bespoke also, a different note that was talking about it, but it might have been someone else. But someone recently on CNBC, if you look in the last 3 or 4 trading days, they had an interview talking about the relative strength in healthcare. So I think this is kind of interesting to see this as well. The one thing I'll say is, remember, Robert Kennedy Jr. is still coming up for nomination, but at the same time, that's a lot of fear that's priced in. It's also, I mean, I think something just to realize is that Congress is so divided, we might not see a lot of legislation get done, which means that certain efforts to crack down on healthcare also might not happen. So just kind of point that out. Now also, you know, right now the consumer discretionary XLY here, very interesting to see how it held this level, and I think right here, Amazon earnings are coming, Tesla earnings are coming, but it's holding this trend line. From my view here, when you have these two big earnings reports coming up in the next 1 to 2 weeks, um, this is something that it might not really this pattern might not mean a whole lot of anything right now. So I did want to mention that. Um, very quickly, I'm over time, but I gotta just show you guys some of the stuff here on our platform. I have this earnings date calendar here, but if you go and you add this thing called next earnings date studies, and you add something like the I'm going to just add the Dow to do it quickly, but this allows you to plan for upcoming earnings season. We share a workspace very similar to this in our market trends webinar on Thursday. So go ahead and join us on Thursday. Also, if you go to tradestation.com, I'll just show you this here, and you go to insights. I had some weird, my Chrome was acting strange, so I apologize. It was just putting me off slightly. But if you go here to insights, basically these are where I have the blog post, and this is the one I wrote today about some of the things in the market. There are some points in here I may have thought you might want to check out if you want to look at this article, and then also my market trends I do on Thursdays. In this webinar, I have a zip file at the top of right here, and you can go to that and you can get some of these workspaces. There's one very similar to this that you can work with, and it allows you to have this earnings date. But remember, why do we look at this? It allows us to look at companies when the earnings are coming up, which is a great thing for planning. You can do here at the TradeStation platform. I want to just remind everyone, because I think we have 95 members of the S&P this week and over 100 next week. This week, if we look, we have, who do we have? We have NVIDIA, I'm sorry, I'm looking the wrong way. This is the Dow. But if we looked at the NASDAQ, we'd see that this week in terms of market cap, we basically have 4 of the 8 names are reporting this week. So 4 of the $8 trillion companies, I should say, are reporting this week. So you can check that out using this workspace. So everyone has a great day. We will see you on Thursday. Don't forget the Fed is on Wednesday, and then GDP is on Thursday morning, and then PCE is on Friday morning. Hope everyone has a great day. See you Thursday.